Let's get the views of our first guest. He's Tim Schroeders, portfolio manager at Pengana Capital, helps manage about $1 billion in global equities. He joins us now from Melbourne. Tim, great to have you on the program. Is this panic that we are seeing in the markets?
Oh, absolutely, Lindsay. I think the market's been blindsided somewhat by a number of events, primarily myopic focus on the Greek debt issues, and then we saw the debt ceiling issues in the US be the prevailing negative factor, and conventional wisdom was that once a resolution was reached that it was going to be safe to go back in, and markets would recalibrate upwards as a result of reduced uncertainty, and that clearly hasn't been the case to date. In fact, it's introduced another round of uncertainties in terms of what's underpinning growth of the global economy moving forward.
You could hardly call what's happening now myopic, could you? Because everything seems to be going wrong.
Yeah, look, I think people were happy with more or less a muddle-through scenario and putting behind us some of the prevailing events, and what has happened is a whole new agenda of things to be fearful about have risen to the fore, and those include obviously taking away the underpinning of possible fiscal stimulus in the US as a result of the Republicans and Democrats focusing on longer-term debt reduction. And when we look in the developed economies, it's very difficult to see positive growth drivers over and above sort of 2%.
It's an interesting point that you pick up here, Tim, because the market started to fall just before the US did this debt deal. They're still falling. Investors don't like it, do they? This is a vote of no confidence in what we've gotten from the US government.
Ostensibly, it's a vote in terms of lack of policy levers in addressing any possible downturn in the future, and that's becoming more of a reality as we get very mixed and on the balance weaker than expected data out of the US.
So what happens next in the markets? Are we going to see some relief, or do you think that, the bottom, we're nowhere near the bottom yet?
It's premature to go and start buying aggressively, in my view, at this stage. I think this could take a little while to work through, but having said that, the balance of probability from what we see is it's not a recession, it's a lower growth environment, and under those circumstances we are going to see a recalibration of what the market seems to attribute to be fair value for a number of stocks, particularly in high growth areas.
But we haven't learned anything new, have we, in terms of growth? I mean, we've had bad US figures, data for weeks now. Why suddenly this panic in the markets? Did what the ECB said yesterday about their willingness to step in and buy bonds and also provide liquidity for banks around the Eurozone, did that kind of say to investors that perhaps things are worse than we thought they were?
I think irrespective of positive or negative outlook, what we are seeing is these things just aren't going away, and that was probably the naive approach that the market as a whole took through a lot of events that we've seen through 2011. We've managed to hit significant hurdles, overcome them, and what has happened is they haven't been addressed significantly well, that people have put them behind them and looked forward. And looking forward now, people are still concerned with more or less the same issues that have plagued the market through the year to date.
All right, Tim Schroeders, we've got to leave it there. Thanks very much for your insights.